There we go.
Hey, Chris.
Hey, Dave.
Great. Awesome. Well, thanks everyone for bearing with us. And yeah, we can kick things off. Um, Thanks for joining us today. A recent survey I came across mentioned that more than half of founders out there at the pre sort of Series A stage are feeling unsurprisingly really worried, either very worried or extremely worried about the current situation around the COVID pandemic and what that means on their business. And again, about half of those founders have also decided to delay funding or fundraising during these times. So in today's session, we'll be covering some tips in times of crisis and providing you with some insights on the current state of the VC market here in Silicon Valley. My name is David Brown, and for my day job, I run an Australian government program here in San Francisco for Australian tech companies. I'm also currently the co-chair of the programming board in San Francisco for StartOut. So for those who aren't familiar with StartOut's mission is to increase the number, diversity, and impact of LGBTQ plus founders and amplify their stories to drive economic empowerment of the LGBTQ plus community. We inspire and accelerate LGBTQ plus startup founders through digital events and online resources, such as expert office hours, mentorship, connections to investors, and an online community. So you can visit startout.org to join 17,000 like-minded LGBTQ plus and entrepreneurs worldwide. And today, our special guest is Chris Davidson. So Chris is an expert in fundraising and investing in companies and industries with a focus on venture capital, startups, technology, real estate, medical and legal cannabis, commodities, as well as hedge funds. In 2018, Chris founded Map and Scale, an investment company to leverage his background in investing and growing and operating businesses. In his spare time, Chris is currently the EIR for the StartOut Growth Lab and also the Australian Landing Pad, the program that I run. So hi, Chris, and welcome to today's live stream.
Hey, Dave. Thank you for that. It's much easier when somebody else does your bio than you, so thank you. And I feel like I'm a Barry's boot camp instructor going live streaming, and this is quite an honor. So
yeah, very, very exciting, isn't it? So let's dive straight into some questions for you. We've got about 20 minutes, so if anyone has any questions, also feel free to pop them in the chat. So firstly, Chris, how have you found the last few months for you personally and your business?
So personally and business, we'll start with personal. I like to say great and fine all in one. I think anybody who says that, they're amazing, is kind of either lying to themselves. So I like to keep it a little real. I'm struggling with, conceptually I'm doing really well, but I'm struggling with the things that everybody is struggling with, that all the founders I work with or funds I work with, attention, getting out of bed like quickly, maintaining focus throughout the day. So that's how I'm doing personally, but kind of leaning in. I have my support structures, I have my processes, and trying to enjoy nature. So professionally, I am doing better than I expected. I put a strategy in for the funds and the companies I work with, that we'll probably talk about here, but a lot of it is, extending runway, decreasing burn, decreasing future expectations on revenue and or sale. So I did all that, and I guess fortunately, knocking on wood, people are leaning into their need for me. So whether it's for a fund, I've raised capital or worked with companies raising capital through 2008, and then also 9/11. So I have kind of lived through some of that, and then I think the founders I work with are viewing the gray hair and needing a little bit more guidance than maybe they would historically. So, I'm fine and great and fine personally, and business is better than expected.
Yeah, that's awesome. So let's dive into that a bit deeper. So how have the needs of the companies that you're working with in the growth lab, at the landing pad, and externally, how have their needs changed in the last few months, and what have you been really helping them with?
Yeah, well, so I mean, first and foremost, their need for me has changed. They need more of their advisor set, whether it's a paid advisor or their board of advisor. I think they're, looking at two people and or their guiders for kind of recommendations on how to navigate this. So first and foremost, they need more. So then, what are those needs? The main thing I think they need is to trust their gut. An example is, if it walks like a duck and smells like a duck, it's probably a duck. If capital raise is going, slower than anticipated, it's going slower than anticipated. If you're getting less traction in sales and marketing, you really need to lean into that, like, this is a real thing, and that things are going slower or things are not going slower. So really the work that I'm doing and we're doing is just helping people to really trust, what's happening in front of them, really being curious what their customers are needing, and then taking that and coming up with, some solutions, right? They have something unfortunately called COVID winners. And I don't like to say a COVID loser because I don't want to call a company a COVID loser, but they're like those non-essentials that are not as important right now. And so, the COVID winners and non-essentials have kind of different opportunity sets. And so the best thing that you can do is really address where you sit, your need right now, and then try and adjust your, business expenses to meet the need. You and I have worked with several companies that have a greater need right now, and I have seen several companies on my own that have a less of a need. So the best thing that you can do as an advisor and or a founder or a fund manager is to really get your head out of the sand, embrace where you are, and then move forward. And so that's, to summarize, founders and funds have more need. And the main things that, I'm working on is really just assessing the landscape in a true and honest and authentic way, and then adjusting to the best of the capacity that founder or fund can do.
Yeah, excellent. So, so obviously, I mentioned at the beginning a survey that found that the founders are obviously extremely worried at the moment. So let's have a chat about the importance about founder well-being. What tips do you have for founders who may be feeling, increased levels of stress, anxiety, and just generally uncertainty about, the future and the current state of affairs?
Well, number one tip I have is embrace the new normal, right? This is our new normal until it's not our new normal. And I think just being honest to yourself about what's happening around you. The people that I see have been most successful professionally and personally have been those individuals that have embraced that. So that's first and foremost. Second, really lean in. So lean into whether it's your advisors, your mentors, really try and kind of use the resources around you. Founders, especially pure entrepreneurs, let's remove some of the fund managers I work with, they have this belief that, 1 in a million, they can solve a problem that no one else has solved. And that's why they're amazing entrepreneurs and founders. This is the time, given all of that, that we can conquer everything. This is the time that I really recommend people listening to other people. Who knew? Just disrupted on Instagram Live. Lean into those who have experience. You have a board of advisors. You have mentors. Use them. They have been through times. They have been through recessions and depression. Well, maybe not depressions, but 2008, closest thing too. Those tactics that worked in the past will work in the future, and or some derivation of that. So, accepting where you are, leaning into your advisory set and or your mentors, and then taking care of yourself. That airplane concept that we probably won't experience in a little while. Put your mask on first before you can, put those on others. A founder has to be mentally sharp, have good headspace to be able to lead a company. And if you aren't that, your company is going to suffer. So, exercise, meditation, David hosted an amazing panel on, founder wellness techniques, tips, do some, there are tons of streaming and or like online capacities that are talking about founder wellness. Really look at that. I also say, this is my little like slap. We need these things. I need these things. I'm 40 some odd years old, and I am doing the things that I did when I was 20 to maintain mental health. Like, this is a time where you really have to do some of the things that you might think you might not have to do, but I recommend doing them.
Yeah, good advice. And I think making sure that I get out, into the sunshine every day, go for walks, do some exercise, get on the bike, waking up at a consistent time. We're fortunate at the moment because we can actually have a full 8 hours of sleep if we're not working around the clock or going out and things. So I'm even feeling a bit refreshed and a bit lighter than I usually do because we can sort of take some of those deeper breaths and take stock.
Yeah, and I love that. I'd love to add on top of that. I mean, you and I, we reached out to, the landing pad community. I reached out to my community. Like, this is an opportunity, you have less time. You're not traveling. I mean, there is more space. It's what you do with that space, right? Are you, other than watching Instagram Live for Facebook, for StartOut, are you always online? Are you being distracted? These are opportunities. It's what you choose to do with this extra time. And one of my favorite things, loved how you talked about, getting up, shouting. There's a great master class by RuPaul, and anybody who knows me knows I quote RuPaul ad nauseum, but he says, do you like money? If you like money, wear a suit. I highly recommend that everybody put on, working attire, whatever that working attire is for you, but like, jeans and tank tops and flip-flop, you're still at work. Like, self-respect, respect others looking at you. It's just this empowerment, I think, that you can have in this time. So yeah. RuPaul, wear a suit.
Always follow RuPaul's advice. That's my number one business mantra. So yeah, onto the business side of things. What impact are you seeing on, for example, marketing initiatives at the moment? Like, and what tips do you have for people around that? Because there is, as you say, there is more for most people, some more time. So what are some of the tips to how you can use that time to perhaps, put in some renewed effort into some marketing plans?
Yeah, I mean, like, I kind of break it down to, the COVID winners and or those with really high demand curves, steep demand curves. You have an audience, get to the point, don't bury the lead. If you're doing marketing initiatives, get to your value proposition as quickly as possible. People are more distracted than ever. There's something going around, there's a bunch of research going around that people have, perpetual ADD at this moment. So like, your messaging, your branding needs to be, never bury the lead, get to the point. You'll hear me say, like, spit it out. So in all of your marketing and sales, like, talk about, if you are doing that outward facing, get to the point, show your value, because people are so distracted, you can lose them instantaneous. Then for like what I would call the non-essentials, I call it like, and so we'll talk about this and maybe as it relates to sales, but like Buddhist market, you really have to put yourself into your client's situation and or your customer situation, and really assess their needs right now. If you're in the middle of a marketing and or sales campaign, I would recommend checking in with the other party. Is it time? Is it being well received? Really be curious and listen. At times, some of the best thing might be like waiting 30 days, waiting 45 days, and or if you hear back from your market that, no, we need you, we want you, go ahead. But, Buddhism, like keywords, humanity, I would say, sensitivity, understanding. And if you are doing a marketing initiative, I'd just be like, your needs of your customer probably has changed right now. And so I would make sure whatever you are doing in that, whatever the branding is or the DNA, is the need right now, not the need pre-COVID.
Yeah, and I like the sort of what I've heard is it's now a great chance to focus more on the top of the funnel and doing that brand awareness and thought
Yeah.
leadership and just being part of that. That momentum at the moment is a good thing, and that's often what founders don't have time to do so much of when they're focusing on the rest of the funnel, which may be tougher these days. So, and I think that the survey I mentioned before said that marketing was one of the top things that are being cut back on at the moment in terms of spend in the line item of the budget, and that has a lot to do with like conferences being cancelled and all that sort of thing. But there's still some good content marketing that you can be doing at the moment if you're exactly as you say, approach it with that Buddhist mentality of understanding where everyone is at the moment and not being toned up to the situation. Yeah.
I think that also relates nicely to sales.
Yeah, let's talk about that. So where does that leave sales? Because we're obviously seeing a lot of companies that are out there giving away their product at the moment, just to sort of get people using it. So what are you seeing on the sales front, and what's your advice on that?
So I break it to the COVID winner and then the non-essential category. Like the COVID winner, again, direct to the point. You know what your value is. Don't tell a story. Just be as direct as possible. For kind of the non-essentials, very similar thing that you were talking about. Like I would say, move away from a direct sale into what I would call like an educational sale or a thought leadership sale, where it's a longer, where it's a longer window that your sales cycle assumes that it's a little bit longer. And so that allows for education, that allows for connectivity to people, things that as you said previously, founders often don't have time to do. It's more of that bottom-up nurturing of a sale, if you would. That works very well in times of need and also with longer sales cycles. I also typically say there are two types of selling tactics. There are a million, but they're lump it down to the main two, like a shark technique and or a killer whale sale. So quickly, a shark, right? They attack. Nobody likes a shark attack right now. Killer whale sale is a finesse sale. And what I mean by that is anybody who watched National Geographic and see the killer whale with that poor harbor seal, they are surrounding them. It's a low sale. It's a fatigue sale. So fatigue sales work really well where it's an extended period, where it's just, more of a educational wearing down to eventually pick it. So no shark, and definitely focus on that longer duration, what I would call like a killer whale / fatigue sale works well now.
Yeah, excellent. And I also picked up something yesterday from a sales professional I was talking to is it's also a good time to educate and invest in your sales team if you have the opportunity to do so, because when you're in the full sales cycle and all the salespeople are busy, it's harder to do that training. So being able to step back and actually reinvest into the sales team and set them up for the new world is also something that we can look at.
Yeah, and to add on that point, I mean, one of the things that people are starting to see is human capital, right? I mean, there's a lot of great talent on the sideline. And there's a lot of probably you can shoot above your pay grade right now. And so like bringing in a sales professional that is a very skilled professional that might not need some education to figure out your exact product. This is a really good time, to your point, to bring in somebody who's amazing at sales and maybe work with them to get your product right now while the volume is low is another great technique. And that actually was something that happened a lot after 2008. You would have really good salespeople cross over verticals because there was time to educate them.
Yeah. So just, I guess in the last few minutes we've got left, let's talk about the VC market and what you're seeing, the trends you're seeing out of Silicon Valley and the sentiment of the venture capitalists, and then what advice you'd have for companies that are looking to raise in the next 6 to 12 months.
Yeah, so I mean, I have exposure to I have hedge funds on Wall Street, real estate exposure. And the main thing that all investors are basically feeling is that this is a several year window where there's going to be to where, you know, the new normal is different than pre-COVID. So the first comment is investors are seeing this as a longer tail. You know, there's going to be a second wave, some additional things. So, you know, seeing, again, putting yourself into the investor shoe, I think is really important. You know, I saw that there are a bunch of different forums out there and or surveys talking about, you know, investor mentality and VC mentality. And I think the carpet don't match the drapes, where every VC, their job is to see deal flow. So they're saying they're allocating, but I actually don't see they're allocating a ton. So I think that, you know, even though investors, you know, say they are, I see that it's slowing down significantly. I think angel investing, because angel investing is based off of Wall Street, it's based off of cash flow, it's based off of, you know, consumer sentiment, investor sentiment, and that's really low. Say angel investing is very dry. Funds are required by definition. You run a fund, you get paid more money that's out. But with that said, you know, VCs are doing more what I call asset management. They're focusing more on their current portfolio and how to make sure that those have the better return. And they're doing less on inbound. So they tell you this, but they also tell you that they are allocating just as much and spending as much time. And I don't think that they are. So my advice to people raising money, don't. First is, if you don't have to, don't do it. Kick it down, you know, whether it's 3, 6, 12, 9. We all, you know, everybody at StartOut, everybody on this call knows that, you know, not always can on fundraising. Sometimes you need money, right? So if you are fundraising, I think some great things to understand, it's, you know, you are no longer in control of the process. It's at their free will. You know, your valuation will be lower. The amount of money people will give you is less. And also the time to raise the amount of money will be a whole lot longer. You know, some of the talks I give about capital raising, I say it's a full-time job. And then 2, it takes twice as long as you think it is going to take. And everybody would give me grief and this and that. And then I start working with them and they're like, you're right. Well, that twice as long has gotten even longer. So the advice is, if you have to, do it, but go in again, open eyes, knowing that you are not in the position of power. You are not going to create a scarcity premium. You are not going to, you know, you can't create fear of missing out right now. You know, oh, we're going to close in 30 days and playing a VC off of one another. Those tactics right now are going to shoot you in the foot. So anything along those lines of what I say are cute tactics, trying to be cute, not to do. And just, you know, and I think, Dave, you had said something, you heard a great speech. And so I'm stealing your thunder, but I'll let you, but like, you know, get as much, you know, quick and, you know, get back to, you know, doing your business. You had a great quote. I'll let you say that. But,
the quote was from a VC who had also been through it all in the GFC in 2008, 2009. And it was like, you know, now's the time for speed over greed. You know, get the deal done, get the money in the door, and then just, you know, move on and start rebuilding or start setting yourself up for the new world. So, yeah, and just, you know, to echo your comments, you know, the data I've seen is that, you know, VCs are looking to probably decrease the amount of capital they're deploying for new deals, so ignoring follow-on and propping up their portfolio. So new deals is probably going to drop about 40% this year. So, and then valuations dropping, you know, 20, 30% as well. So that's sort of, you know, what we're seeing in, you know, a few data points. But there are some bigger deals being done, I think, in the later stages where risk isn't such a, you know, an issue, and perhaps they're the COVID winners as well, and those deals would have been in the pipelines for quite a while.
One of my takeaways from post 2008 or the great financial crisis, I like that acronym. I'm going to have to take that one on, but you invest in things that you know and or what would be called safe, right? And so, like right now, a COVID winner, you know, I think people are willing to take risks on things like that. know where you stand in this, right? I mean, if you're an essential, non-essential, just, understand, sorry about that, low battery, understand the game that you're playing, understand the cards that you're dealt, right? And so I think that's really important in capital raising, is know the power, know the strength. And investors right now, and this is one, like we had a discussion about this and it was really interesting. Somebody asked a VC friend of mine, would you invest in somebody that you never met face to face? And I, as an investor, probably would not. So, I'm a little bit different. I also typically invest a little bit later in, the VC to private equity, growth capital. And, but I wouldn't, because I think these are like, you really are building those relationships. And so, if you're starting a new relationship with somebody, like I would just be sensitive that, it's going to take a whole lot for somebody to write a check for you when they haven't seen how you walk, how you, just actually that interpersonal. Zoom is great, but, and so I think that's an interesting thing to note when somebody says, if you're looking at the probability of raising capital and you're doing your probability matrix, and like I would have on there a new criteria. Have I met this person, live? I'm not telling anybody to break quarantine or anything like that, but like, I think that is, as an investor, you have to think about your fund and like you are entrusting somebody, and without having like real personal experience with that individual, I think it will be difficult.
Yeah. Well, awesome. So I think there's some great tips in there. For those on the line who want to hear more about this sort of stuff, there are some upcoming events for StartOut. On May the 6th, we're doing a fundraising and entrepreneurship Ask Me Anything with some StartOut advisors. And on May 13, there's one focusing on marketing and PR as well. So look out on the StartOut channels for those events. And Chris, thank you very much for joining us today, and have a good day.
You as well. StartOut is amazing. This really, and also the more that you can lean into other StartOut community members, there is, as David said, there's 17,000, become a member, get the access. You can really lean into, we have a very good database where you can find other people that are in a similar situation. Community is really important. And, I think affinity group marketing right now, affinity group sales are really important, right? We are part of our community. This can also help lead to other things. So really lean into the StartOut. I have seen so many people find mentors, investors, clients through this channel. It works. Show up, join in, lean in.
Awesome. All right. On that note, we'll let you go, and everyone have a great day. Thanks for joining.
Ciao.
Bye, Chris. Thanks.
Bye. Thank you.